I've seen a lot of chatter recently about people claiming to make money trading stocks, really not even worrying about the charts, just worrying about risk management, just doing the math, just getting the correct risk reward, and allowing the randomness within that to still pay them dividends statistically. I think it sounds a little ridiculous. You might be thinking the same thing, just kind of randomly buying stocks, setting a 2-to-1 risk reward and seeing what happens, not caring about the chart at all. But nothing's ridiculous if it works, right? So let's test it. Let's run some back test. Let's see if we can make a strategy like that work. Hit like and subscribe while the intro plays, and let's get into it.
In a world where money is all that matters, people look for any reason to profit. Which way is best? Welcome to the indicator trials.
I've got the code now set up to buy shares of SPY at open bell and to sell when it either goes 2 points up or comes 1 point down. So it's randomly buying. It's just buying the open every day and giving itself a 2-to-1 risk reward. And that's it. That's all the entire strategy is doing. It doesn't care about any chart setups. Doesn't care about your RSI, Stoke, MACD, anything. It's buy open. Take a bracket order, set your 2-point up sell, set your 1 point down sell, and allow the randomness of the stock market to hopefully work itself out to make you money. As you can tell, that is working over here on the screen. Buy open, sell if it goes a point down, buy open, sell if it goes 2 points up. Let me go ahead now and turn on the floating P&L so that we can see the performance of this strategy over the last 180 days. And as you might have been able to guess, this was kind of my presumption when I read this idea on Twitter, was that it would be just about break even. And it is. It's down $49 in the last 180 days trading this way. Just randomly buying, going a 2-to-1 risk reward is a pretty break-even strategy. You know, the randomness of the stock market kind of works itself out to be even. But the beauty of backtesting with code is that we can come in here, as you can see, you know, reward 2 points up, risk 2 points down. That's what it's doing. Reward over the entry price up 2 points, entry price down a point, it's getting out. But we can come in here and we can tweak this. It's also just getting out at end of day. Some of these days back when SPY was less volatile, didn't even see 2 points up. So if it didn't get 2 points up, you know, it just exits before the end of the day. That's another important part of the code as well, especially as we come in here and start to fudge these numbers. So let's actually scroll this back over and let's go ahead and start messing with the risk reward. Like, okay, it's at 2-to-1. Well, what if we make it 3-to-1? Does that, so now sell if it goes 3 points up or 1 point down. You can see now it's up $105. Still definitely not any kind of profitable edge over the market or anything. I mean, it's once again, still basically break even. What if we take that 3-to-1? But since we know, since I just showed you that earlier before SPY picked up volatility, it wasn't even getting 2 points up. It was just having to close at end of day. So that's not really getting the risk reward, right? That's kind of just, well, the day's ending, I have to sell now because it's not an overnight hold strategy. So what if we make it smaller? Let's still go 3-to-1, but let's go $1 up, not 33 points down. That would be a bit crazy. One point up is its reward, or 33 cents down. So still 3-to-1, but let's make it tighter so that it hits this end of day sell case less often and it's really getting to play its risk reward. Now you're maybe starting to see something, right? Now in the last 180 days, it's up $3,000, this strategy is, which is still nothing crazy. I mean, this is taking 100 shares of SPY each trade. It's not crazy, but it actually looks to be a profitable edge. Obviously, where the markets were strong, you're like, duh, Trey, if you buy it open and sell, it's, you know, you're going to make money when the markets are strong. But let's go to the market high. So the market high is in January, right before the crash started. This is right here. No, that's the start of December, sorry. This is the market high, as you guys know, right before the crash started. Right here, it is up $1,200. Now, if we just slowly scroll through, you'll actually see that even while like we've been in this kind of market turmoil, the strategy actually still makes money. We end up over $3,100. So in the last 6 months, we've made still $1,800, even with the markets coming down with a strategy like this, this kind of idea of just playing risk reward. And we can come in, I mean, you can come in, I will give you guys this code, by the way, if you guys obviously don't just please don't, oh, I watched this video, now I'm going to do this. I mean, I'm not going to start trading like this either, but it's just, the whole point of this series is studying ideas, seeing if they work with real backtest strategies, right? Let's make it 2 points up and 33 cents down. So now you're getting, I don't even know what that risk reward is. It's really high. But now you're at a $4,700 up. Let's go ahead and turn on my results code. I would like to see the win rate of this. I would imagine the win rate is very low, but you're getting, I mean, whatever 2 points up to 33 cents down, that's like nearly 10 to 1 risk reward. I would imagine is, let me see if I can refresh. There, no? Why do you keep doing that? Let me see if I can turn it off and back on. The results code is super long. There's a lot of code in this results strategy, so sometimes it breaks. Are you going to work? I would like to see the win percentage of this strategy. Thank you. Yeah, see? It has a 27% win rate, and it's profitable. That's what I try to preach to you guys a lot, too. You don't have to win all your trades. If you're getting a risk reward, you're making, so you can see highest return 200, lowest return 33, because that's every trade. Average win 188. I guess sometimes it ends at end of day. Sometimes it doesn't get the 2 points up, so your average win is a little bit lower, but average loss is $33 because that's every loss. You're setting a hard bracket, and it's on SPY. You're not really going to get much slippage. Like, you're like, okay, Trey, well, what about slippage? What about liquidity issues? If you're doing it on SPY, not really going to happen. You're pretty much always going to get out at $33 down, maybe $33 and a couple extra pennies with some slippage or whatever. But if you just took this strategy with brackets, you'd pretty much always get your exits. Anyway, yeah, a 27, call it, percent win rate on this strategy, and obviously it still works. Let's go back to the smaller, so let's make the reward back to 1. I want to see the win percentage. You would assume the win percentage goes up now, right? Yep, win percentage was at 38%. I hit apply again. I shouldn't have done that. But I saw the win percentage, yeah, up to 38%, but it's not as profitable, which is just really, really crazy to look at. I'm going to turn off the results code now. We proved the point there, and it just makes it run really slow. What if we go 10 to 1? What if we go 3 points up, 33 cents down? It is now, oh, the results code stayed on, but it's now at a 20% win rate, and it's up $5,200. It's like all of a sudden, just this kind of random buying. Look, I mean, it loses most of its trades, right? Loss, 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 loss. Let's find one that wins, though. When it wins, here, a win. It's making 3 points. So it can win 1 out of every 5 trades and be profitable. It's like this actually does start to work. Not really at a 2 to 1 risk reward. It's pretty much just random. But if you start, or pretty much break even, sorry. But if you start to up that risk reward, you start to look for higher risk reward. Yes, your win percentage drops off the table, but it works. I mean, we're up $5,200 just buying market open and selling if it goes 3 points up or if it goes 33 cents down. That's all. It's just random, but playing risk reward, playing the math, and it seems to work. Once again, I will give you guys this code in the comment section down below or the description down below. Come in here, tweak it, come mess with it. This is a good little maybe study that you can use, not to exactly trade. I mean, maybe you don't want to just go start trading exactly like this, but this is a good, like, you can start to test what kind of risk rewards maybe work the best, and maybe you can start to implement, those risk reward ideas into other strategies. This is a good way to test, like, what's the most profitable risk reward to play. And it seems that raising the risk reward, I mean, there's got to be a point where it stops working, right? There's got to be a point. I mean, even 5 points up, you're looking for 5 points up. It's up $6,900. I'm sure losing most of its trades. I'm making sure that this is actually working because it seems like it's broken. But I mean, it gets in at market open at 370.62. It exits at 375.62. Or if it doesn't get 5 points up like the day previous, it gets out at end of day. I mean, it really seems to be working. It feels like it feels too good to be true. It feels like this shouldn't be working, but I can't see a way this code isn't working. So it's like really ramping up that win percentage. I actually am going to turn the results code back on because I want to show you guys. I want to see personally too what the win percentage is now, looking at 5 points up and risking 33 cents down. I want to see what this win rate is. Let me run it again. We're going to do one more thing as well. I want to see, okay, we're doing it randomly, just buying at market open. What if we give this thing, by the way, look, the win percentage is now at 18% and it's making money. It works because the risk reward is so good. 18% win rate. is this profitable because the risk reward is so big. If anything, this video is a great proof of that, how you don't even have to win that many trades if you're getting and guaranteeing a really good risk reward like this, as long as you stick to your plan. That's why you have to let your winners run. It's why you can't cut winners early, because if you started to do that in this strategy, your win-loss would stay the same, but if you started to cut into this average win, you would start to really this not work. Anyway, what I want to do next is, instead of having this thing randomly run, I want to put the idea onto my strategy. So it's going to be entering where my strategy enters, and then it's going to be getting out at that risk reward. We're going to start with 2 to 1. If I run it, you guys will see that this is now my code. This is the strategy I trade that I back tested for myself. So it's going to have my entrances, but its sells are just going to be if it's $2 higher than the entry price, sell. If it's 1 point lower, sell. Same thing on shorts. If it goes 2 points down, cover. If it goes 1 point down, cover, or end of day, or at end of day. So let's see how this runs initially, and let's compare it. Let's compare it to what we were just looking at. We were just looking at it flipping. What even was that? 5 points up to 33 cents down was up $6,900. This is up $9,200 with just 2 to 1 risk reward, right? We can come in here and tweak this as well, but I'm not going to spend too much time on it right now. But in the future, I can come in here and tweak this as well. But look, I mean, it's now looking at the chart a little bit. It's now, giving itself a reason, like waiting for it to spike up to short and waiting for it to dip down to buy. So now it's not just randomly buying, and it's up more money. It's also taken a lot more trades though. So is it really better than just the random? I would actually say it's not, because the random took 1 trade a day. This is taking a lot more trades. So I don't know if I would necessarily even say. My strategy is also a 2-minute strategy though. It's not a 5-minute strategy. So let's go to the 2 minutes 30 day. It's up $2,000 once again from where it buys, looking for 2 points up or looking for 1 point down. So just putting 2 to 1 risk reward on the buys and the shorts as well. I actually haven't done this yet, and I'm a little nervous, but let's do it. I want to compare this to my strategy. So this is up just over $2,000, $2,040. So keep that in mind. And then this profit range bar is my actual strategy. What is this up the last 30 days? Okay. My strategy is doing only a little bit better, and I didn't even try to tweak the risk reward yet. I could potentially go tweak that risk reward, because we actually saw that 2 to 1 was basically break even. I could actually go tweak that risk reward, but my strategy is up $2,500. Let's do it one time. I don't want to take too much time up on this video, but let's tweak the risk reward just one time, just to see if we can make it. And once again, both of these will be in the code down below, or in the description down below. If you want to come in and mess with this yourself, please do. Please take this and play with it, right? So let's give it a 3 to 1 risk reward on both its longs and its shorts. I gotta make sure the entry price is entering at the right spot too. So now it's at 3 to 1 instead of 2 to 1. Okay, it actually does come down a little bit. It's at $1,800. So maybe something I can tweak with there to see if that does work better. But once again, I'm not planning to necessarily go start trading like this. The idea of the indicator trials of this series is just to test things, right? You see things said on the internet all the flipping time. This is really putting them to the test, really making sure whether they work or not, and not only whether they work or not, but how they work the most efficiently, right? So let's go ahead and end on this. If we go back to the 180 day, let's go ahead and end here. Where did I leave this? 5 points up and 33 cents down. Insane. If you really just buy at market open, look for 5 points up, 33 cents down, or just sell at the end of the day, it just does so well. It's really insane to see that at an 18% win rate, up $6,900 in the last 180 days. So maybe there is something behind, the craziness that I thought I was seeing on Twitter of, and I'm sure a lot of you guys have. Maybe you're not on FinTwit as much as I am. This is kind of my job. But maybe you guys haven't seen it as much. But it's been all over Twitter lately. This idea of, I don't care what the chart does. I just use math and statistics. Now, I preach math and statistics all the time, but I've never taken it to this extreme of not caring what the chart looks like, just buying and just setting a risk reward, just caring about that. I've never taken it to this extreme. I thought it was kind of crazy when I read it, but once again, that's the point of this series. Test ideas, see if they work, And this one passes. Surprisingly, this one passes. And that's really, really cool to see. So hopefully you guys enjoyed the video. If you did, please hit the like button. It really does help. And if you're new, why not hit the red subscribe button? I make videos like this every single day. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.